Welcome to 2025 Trading Justice Podcast, talking fake out to breakout. And when I say 2025, we had a week that I think we're going to have a few of this year, where things look one way and then all of a sudden they look much, much different at the end of the week. We're going to break out the bullish win this week. It was really good. It was narrative based. It was data based. And we had some nice price action, best price action in a couple months. We're going to go through that. We're going to have stocks in the news. We're going to have Coach's Corne. Sure, we'll have a few sarcastic comments along the way. But Matt, before we get that, let's talk about tackle trading. Let's talk about you. I don't even care how you're doing. Maybe somebody else does, but I already spent too much time intro to care about your feelings. So we'll get to that in a second. But you do have a lot going on this week at Tackle Trading. You have you had an art of the reversal webinar last week. You're talking AI Gold Rush this week. We got the Traders Lounge. We got the Coaches Show, in which you'll be doing part 3 of Tackle 25 covered calls. There's a lot going on. I'm done talking. How you doing?
Yeah, we got last week. Definitely check out the Art of the Reversal. It's posted on our YouTube channel, and so if you love technical analysis, I think you're gonna enjoy the Art of the Reversal webinar we did from this previous week. We got the AI Gold Rush, which is a registered event this week. You can hit the link in the description below. And we're going to be talking, obviously, about the AI marketplace. What is it? We're going to go through the latest updated AI watch list called the AI Gold Rush. Once again, we're going to have a lot of fun. That's on Wednesday night. But for our pros out there at Tackle Trading, we got a fun week planned. We got Tuesday night's going to be round 3 of the Tackle 25 covered call conversation. I was planning on 1 week, that went to 2 weeks. Now we're on 3 weeks because we've been having a tremendous amount of fun, learning a tremendous amount in the Coaches Show every Tuesday night. And then obviously Thursday, we got Cash Flow Club, and throughout the week, we got the Traders Lounge. So a lot happening at Tackle Trading, but for our podcast purposes, check out the AI Gold Rush and the Art of the Reversal webinars. Obviously, Gold Rush this week, Reversal last week.
Yeah, Matt, great week for the Bulls, and we're going to talk about some of the things that fed it. I want to talk about the technicals first. I just want to talk about just the price action, and then we'll walk through kind of a chronology of how this came about day by day this week, and then a little look ahead. But Matt, from a technical perspective, when I was looking at intraday charts all week, Bulls didn't budge. I commented on this to you during the course of the week as they had supreme control on intraday control. There were many attempted sell-offs, as there are on intraday charts all the time. Bears had zero success with those, except for maybe like an hour at the end of a couple trading sessions. It was a big week top to bottom for the Bulls from a technical perspective, wasn't it?
Yeah, but I think it's impossible to talk about the technical condition without actually talking about why the technical condition was that way. I mean, you started off Monday morning. It was a crazy week, especially early on. You start off Monday morning, obviously last Friday is a down day in the market. Everybody's sour. We're talking about the Bears having the edge going into the weekend, talking about 580 better hold, 580 better hold. And then on Monday morning, we're dealing with a gap down situation with the market crabby as, all get out. And we're all talking about the violation of support. And by the end of the trading session on Monday, 580 was reclaimed, and all of a sudden you're talking about a fake out. Now, what a fake out is in the market, it's when you're everybody and their dog is looking at this support level, right? Or resistance. Fake outs work both sides of the ledger. And so you're sitting at support, and all of a sudden you come underneath support, and it triggers everybody to get a little bit more bearish in the short term, and everybody gets a little bit more concerned in the short term, and the Bulls get nervous, and the Bears start celebrating, and then all of a sudden 38 minutes later, the Bears are crying, and the Bulls are like, what just happened? But it shifts the behaviors quite a bit. It goes from the Bears being celebratory to, wait a second, what just happened? It goes from the Bulls being nervous and scared and locking down risk graphs to opening
and
it
up. And I know that
and
sounds like hyperbole, but that's how fast it happens from a real trading perspective.
No, that happened on Monday. It was all of that was on Monday. And so you had this fake out situation on Monday occur where you tested support, came right back up. That's a bullish candle, and it is a big time bullish candle when you're just looking at it from a single candle perspective. But the story of the week starts kind of with that fake out. And then on Tuesday, you have this hammer candle, which tests underneath 580. Once again, defense comes right back up, and you're kind of hovering there with that PPI report, which was a positive step in the right direction. If you're concerned about inflation, the Fed being able to cut interest rates this year, well, pipeline inflation came in at 0.0 this month, giving a little bit of reprieve.
And that was on Tuesday morning.
That was on Tuesday morning. Now, Tuesday morning, I can tell you what we're talking about at Tackle Trading in the Lounge. We're talking about, guys, support is holding, cyclicals are starting to come back up, and now we got that really important Wednesday candle where you got the combination of CPI report, the combination of the bank's kickstart to earnings. And like I talked about, Mark, I talked about it in this podcast. I talked about it for 2 straight weeks in the newsletter. We talked about it all the time on the Traders Lounge. The banks were, I don't want to say everybody in the market expected the banks to do what the banks did, but we at Tackle Trading certainly expected the banks to not only get on base, but do really, really, really good. And I know we're going to talk about them in a second, so I won't get into any of the detail right now, but they had a really good kickstart to bank earnings, better than expected. And I would say high bar expectations for those banks' earnings. They overcame high bar expectations. And the CPI report, although not a great reprieve, certainly did give a little bit of a reprieve to follow through on the PPI report on Tuesday, where CPI report, especially on the year-over-year core side of the equation, came down a little bit. And so a little bit in line on CPI, but with the banks kicking start earnings on really good. And so that was all early in the week. Technically 580 holds on the fake out. Now you're talking about a little bit of bullish momentum. And then Thursday, you just kind of hesitate dialing in. And then Friday, just had another little bit of a lift-off candle on Friday with some really good recovery. Cyclical's doing good right now. Defensive shoring up, but some real good recovery on the technical side of the equation, i.e. technology on Friday as well. Now we dance the $600 breakout level.
Yeah, and when you look at the price action, because we can get wild price action to the upside that when I analyze it, it's totally meaningless because it doesn't contain a narrative, doesn't contain a driving theme. It just feels like a, buckaroo bounce, on the rodeo ring. We look back post-Fed meeting, we got one of those bounces where it felt like it's just wild snapback rally. We got another one of those, towards the end of December, right? And so, when you start to get in these choppy conditions, you can get bounces where, a trader like myself will be like, well, this one feels different because there's some narrative and there is, some feel to it. When I look at just from a narrative, from a, what is behind this
what's behind the move?
What's behind the move,
what
right?
got the bulls excited? Was it just support holding and algorithm moves back up to the top side?
Is it just short covering? Yeah, and that's not how
those things matter.
They matter, and as a trader, your call on an upward move in these conditions where you're still in a form of consolidation, right? You haven't even cleared the high from, a couple weeks ago, from about a month ago, I should say. But this one feels different. One, okay. And I'm going to, just, throw out some things behind this that I think, were behind it. One, I think earnings, the bulls needed a shift in conversation, right? Because they needed a shift in conversation. In the previous month, ever since the red Fed candle day, what have we talked about? We've talked about inflation. We've talked about stickiness. We've talked about yields. We've talked about dollar. We're talking about the Fed. We've seen
it's been a 100% macro environment, and markets don't love 100% macro environments.
And that's that's
markets
not about
simple themes. That's what they love. Simple things.
Bulls love simple things. Bears like a little complexity.
Bears love complexity. It is true. Bulls, the most simple people in the history of mankind. Yep.
And so you have a shift to earnings. You nailed this on the bank earnings, not only on the results, but the market reaction. And so you have this shift to micro. Earnings are going to be decent. Now, what's your take? Just 30-second preview of what you think this earnings season is going to be.
I think we're in store for a good earnings season. I think, we've had lackluster earnings seasons for the last few quarters where blended growth hasn't achieved certain metrics that you set out to do. I think we're in front of a pretty decent earnings season. I think with the banks, you're always looking for the banks to get on base in the newsletter, and I'll leave the deeper analysis to the newsletter for our pros. But at the end of the day, I think the banks did more than get on base. There was big time expectations for the banks to come through, and they beat those big time expectations. And not only did they beat the big time expectations, but there was not a lot of flaws in the banks analysis. Banks were expected to be the number one sector improving blended growth, and it's very rare you see blended growth get impacted in the first week of earnings. You don't have a lot of earnings reports coming to the market. This time you had a little bit more. You had Taiwan, Schlumberger, Goldman Sachs, Bank of America was kind of added to that first week. So typically you get 8-9 components reporting in the first week. This time we got 19 components reporting in the first week. And so there was a little bit more impact there, but typically I don't see a lot of sizable movement on blended growth till you start getting into tech week and kind of that second, third week of earnings. And this time you saw improving conditions, over 12.5% right now on blended growth. That's 12.5% on blended EPS growth. You're talking about we're in front of what is expected to be the best earnings season since the fourth quarter of 2021. And I would personally say we have a better start to this earnings season than we did even back then. So
Yeah, and so earnings can certainly be at a minimum.
I expected a good start though. I want to be like,
and so we'll see how.
I'm not surprised the bulls came through this week. I took the bull case last week. I'm not surprised, and I'm not surprised it was earnings that really kind of kickstarted it. But that's the banks. Now we got to see healthcare and other components start following through. But the banks did what they did. They got on base, hit a double, triple.
And so we'll see if the earnings can propel, and that's one thing. And then you had the inflationary data. And this is kind of low for me on an upward and oh my goodness, let's go to the moon type thing. But it was a stabilizing thing, right? The inflationary data came in and you had, pretty high expectations for maybe some hot data to come in. That is not how it played out.
We're lucky. If you would have beat high bar expectations on inflation, it would have been nasty.
That is not how it played out, right? And so we're having a much different conversation. Now, does that mean inflation is dead and we're not going to revisit these? Obviously not. We will be revisiting these conversations.
Inflation's going to be a concern for the rest of our lives. Let's just understand that that's going to happen. So, but I will say on this slight miss did a lot more than a slight miss for the marketplace. It shifted the conversation and take inflation off the board as a chief concern this very second, which allows us to focus on the earnings results. With that, you're still concerned about inflation. You're still talking about inflation. Everybody is in their content throughout the week, and this weekend is talking about the concern on inflation. What's that going to mean for the central bank? Looking at the dollar. Now, what are we talking about? Oh, wow. Did you see Goldman Sachs and the 48% EPS beat? Ooh.
Yeah, well, and Goldman Sachs, and we'll talk about some specific things. Yeah. And this is me, and you might disagree with this, but earnings can do as great as they want. But if the dollar and the yield take off to the moon, it's going to impact those down the road.
The anchor's the dollar and the yield conversation, and that improved. And because that improved this week, the market improved. No, the dollar's chiefly important right now. Yields are chiefly important right now, and so this was a good step in the right direction. But you're absolutely right. No, we're going to be debating inflation and yields and the Fed path of policy all year long.
Yeah, and then there was some in a busy week, there were some comments by Governor Christopher Waller from the Fed that certainly caught my attention. I wrote about this in the the economic section of the newsletter, where Waller, who's not a Goolsbee, who's just this super dove, who's like, oh yeah, we're just super dove. He's not the old Karkashi, who's now supposedly a hawk. Who the heck knows? He's just with the wind
these days.
Yeah, and Pat.
I know who Karkash. I know that guy.
Yeah,
his heart is.
He's not a pal who's just a cheerleader actor. He's a pal.
We know what Cash is doing.
Waller's one of these people that is very respected. In fact, when you see Forex Factory, they'll put his upcoming speeches in orange. They don't do that to other Fed speeches.
No, there's only a couple Fed members that get the orange and red coloring on.
Al gets the red, but Waller,
yeah.
but Waller, and he made some comments that took a lot of people, including myself, step back a little bit when he was like, listen, the Fed's basically cutting this year. He said that, and not only is the Fed cutting, but if he sees disinflation progress on any lines, you could be getting 3-4 cuts. I mean, the comments were far more dovish than we've seen out of other.
I think we as market participants have been having a different debate on the inflationary path of policy than the Fed is having.
That's cut that because that's a great line.
When you look at the Fed, they're looking at this as a scenario where we are still in restrictive territory. We feel comfortable with where where policy is. We have concerns on inflation, but they're not having this, oh my goodness, we're going to start double dip inflation. We're going to start raising interest rates. They are committed to going to neutral territory on monetary policy. They are committed to that. And where they're at on the 3% inflation right now is we are still restrictive. We're going to be restrictive until we get down to the 3.5%. And so they still see it as we have a restrictive monetary policy in an environment where we have 3% inflation and 2.5% GDP. They're seeing it from that perspective, whereas we are getting overtly concerned over single data points on the inflationary side of the equation. I think we're having two different conversations. I don't know who's right yet. All I know in terms of the fight against inflation, actually I do. We're right, they're wrong, because they're not going to achieve their 2% goal. But at the end of the day, the Fed is seeing it as we have they probably have 1 point of restrictive territory in their interest rate policy right now. And so they feel they can reduce that to neutral territory this year, regardless of whether or not on a month over month basis, we're talking about rising inflation or contracting inflation. They're looking at it as the restrictive territory needs to get alleviated and bring monetary policy back down to a net neutral zone. And that's kind of what Waller said this week. Mark, last week I went from they were the most dovish comments that came unexpectly for me went from
in a while
ago thinking we're going to get 2-3 cuts this year. That was kind of my projection, 2-3 cuts this year. Based on I just thought they were going to reduce it down to neutrality. And 2 weeks ago, even a week and a half ago, I'm like, are we even going to get one based on what's going on with the dollar and yields and inflation? With Waller's commentary this week, I'm back on they are committed to leaving restrictive territory.
This was one of these little moments in my macro little policy, how I think I'm like, nope, these people are far more dovish, knock it off. Like they're going to pump. Like I'm more inclined to think that the stocks are going to have a blow off top than we're going to have a correction based on if the Fed, because the Fed wants to cut, the Fed's going to be supportive. Don't fight the Fed, right? It's funny. 2 weeks ago, don't fight the Fed because maybe don't fight the Fed if they're super.
I think we're all trying to figure out over the last few weeks, because of the double dip inflationary situation, is what does this mean for the path of policy? And when you're having a debate in the marketplace, markets don't price in debates very well. They price in volatility is what they do. And
that's another great line. I love that. I need to start writing these down. They don't, because it's true. It's true.
But as that debate starts to come to a culmination, which it kind of feels like it is in the short term right now, what's the market doing? It's now having an earnings conversation. And I'm sure there'll be a little bit of the executive order conversation coming into this week, but if the market's going to turn its attention to earnings is going to, a backdrop of earnings is going to be perfectly fine. I as a bull, I think that's a good thing.
Listen, bears need Armageddon to not only be a possibility, but happen once you start bearish conditions. We've seen this, people get bared up. We saw short interest really increase. We saw price action, and then,
Waller's increase on a fake out, short interest.
Waller's comments, that is not bearish. The CPI PPI data was not Armageddon.
What was the most bullish theme for you this week? Because you had Waller's commentary and
I know what's last. The CPI and PPI data, they're last. That is more Armageddon postponed, right? Yes. Because you still saw PPI data the highest since early 2023. Like I could make the
inflation is still a concern.
Yeah, like
there was no victory on inflation.
There was no. Oh my gosh, no. So that's last.
There was high bar expectation that came in slightly under on the CPI,
and so I was a good number. Yeah. I mean, it's one of those more like, oh, bears are going to pay for their thinking, because bears, they have to get it right. They have to get it not just. I mean, it's got to happen, and people got to scare and yields. So that was a good short-term reprieve, but probably for me, earnings, because it's a reminder that earnings are strong, and then probably longer.
It's only real conversation we had last week in the market,
but it does give me some real intrigue, because the Fed. There's nothing happening this week on a macro level, like other than what we're about to talk about 30 seconds from now in the executive orders. But there's no economic reports. But then 2 weeks from now, the Fed meets. It kind of gives me like, are they going to have a more dovish message than the market expects? I think they might. I think they might.
I was going to try to balance that. I'm sure we'll have conversations going into that. So I'll say
Powell wants to keep his job.
Powell wants to keep his job. He's going to have to do some appeasing himself then.
Anyways. So
I would say for me, it's bank's earnings. That's the number.
I know you're an earnings guy. I get if somebody beats by 0.05%, you're like, that's quantifiable. That's more than all the. And I know how your brain works.
And at least in the bank's earnings, we have actual raw data we can.
Listen, I know how your left brain nerd works.
Like we got to price things into the market here.
All right. So something that. And you and I have had a debate. So we have a decent stage set heading, in the coming weeks. We got macro data taking a backseat, right? Not a lot of things to potentially propel the dollar in yields.
We have conversation is yields and inflation. And
we have an earnings season that's probably going to be decent. We'll see if it's stellar or just decent, but not bearish. We know that. Fed commentary, we'll see how that evolves. Not too shabby. Now comes what for me, and you and I have had a few debates internally, heading into Inauguration Day. What does Trump drop on day one? Now, Matt, and I believe.
So are we now talking about the variables next week?
We're talking about what sends it up from here outside of earnings.
Okay, before that, can I just kind of paint the technical picture, because this conversation is important, right?
Okay, paint your technical picture.
When you go from fake out to breakout, which is basically what we did this week, right? We went from fake out to breakout. You got to dial in that breakout. You get immediately slightly overextended into a very, very important resistance zone. Everything this week is improving conversations. Everything this week is bulls came out and defended their territory. Now they're talking about, can we see a leg here? Can we get a real trend to develop this week? I thought the bulls did everything they needed to last week, but that was not enough to actually break out of resistance, and resistance is at 600. And so dialing in this resistance breakout is going to be really, really important in my estimation. And the variables this week are, you got very little on the economic side of the equation. You got 37 S&P 500 components led by Netflix, and you have a couple other stocks out there of importance, but you don't have any like Mag 7 components that are reporting. And so you're going to have about twice the amount of earnings this week as we had off the kickstart last week. And you also have probably the number one variable out there this week is day one executive orders. Would you agree with that?
Yeah, just because there's going to be a lot of them.
There is some anticipation for quite.
Yeah, like Trump only did one day one executive order last time, I believe, and then he signed a bunch in the company. But like, this is a very abnormal thing. There's just going to be a lot.
This is unprecedented. Let's just call it spade. It is unprecedented to have this amount of executive orders. But I will say this: executive orders are not a thing that is like historically driven. executive orders is something that has become more and more popular in the modern era. With Bush, you saw more executive orders aggressively under Bush than you did Clinton. You saw it under Obama far more than you did Bush. You saw it under the first Trump administration far more than you did Obama. You've had a ton out of the Biden administration, maybe not on day one, but you did have a ton of executive orders out of the Biden administration. And so this is something that has really kind of been how the executive branch sees how they can govern in an environment where bipartisan has proven to be difficult over the last 15, 20 years. And so the increase in the viability of the utilization of executive orders, although what we're going to see this week is a little bit unprecedented, it is the way the executive branch has seen as a way to govern in the immediacy of action, where quite frankly, Congress has been proven to be inept many, many, many times over the last 20 years. And so it's just something that our society has gotten more accustomed to. And so I do want to say, yes, it is unprecedented to have this many executive orders, but that's the way the trend has been building for the last 20 years, quite frankly. Now, I personally, I'm not the biggest fan of executive orders. I would love more bipartisan work through the legislative process. You know, Mark, I am kind of that policy guy. I like policies. I like the law legal making process, but I also understand why presidents do it through executive orders when, quite frankly, bipartisanship is very difficult today.
They do it because they can. I got a trivia fact for you.
Yeah.
What do you think the record for the most day one executive orders is?
I know it's not high. I'd say less than, off the top of my head, I'd say less than 10.
It was Biden last time, 17.
17.
Biden last time, yeah. 17.
See, that doesn't surprise me.
And he shattered the previous record.
What was the previous one?
I think it was like single digits.
Yeah, it has not been a thing, but in general, the popularity of executive orders has increased exponentially in both the allowing the executive branch to utilize them as lawmaking process, or two, I just think it's going to be a thing in our future. I think this is here to stay.
Well, Trump's about to, in sport the records equivalent is like, it's like, what's the most home runs in a season? 70 something by Bonds. 73. It's like, if that was the equivalent, Trump is going to go out and hit 485 home runs on executive order day. That's the percentage.
There's some expectations here.
And so, all right. So you have you got a decent narrative backdrop you're working with, Bulls, coming to this. You got a decent technical backdrop, right? You got all of the components. If the market sniffs victory on executive orders, right?
I think it's liftoff.
Then I think you have liftoff. I think the downside is far more limited than the upside on executive orders. Could there be a series of executive orders specifically?
15 points down, maybe 20 points down, maybe on a negative interpretation of executive orders. You could see a trend develop with momentum here on a positive news story.
Like this is for me one of those little moments that you get in the calendar where it is the start of a trend, right? Where you know how we saw Powell pivot in November of 2023, Powell pivot in when was it? This January of 2019, right? Trump backing off.
Has there ever been a central bank president that pivoted more?
No.
No.
Trump basically backing off, playing nice with China in the fall of 2019 started a nice 5-6 month trend, right? And so
that was the kind of like the alleviation of the trade war.
Yeah, he's worried. They're like, okay, we're going to play nice now, and then all of a sudden you broke out of this multi-month consolidation pattern. You've had a sneaky multi-month consolidation pattern here, right? Like you've basically been trading sideways for several months.
Really, I mean, since early November is kind of where the same price is. Like it's been a couple months, yeah.
And so if the market interprets, because there's going to be two types of executive orders from a market perspective. Well, let me rephrase this. 3. Let's see if you agree with this, Matt. 1, the kind of executive order that has zero impact in any shape or form on the market, like, the gender affirming care,
vast majority of the executive orders,
the vast majority are going to fit into that, where they have
I would agree. The vast majority have very, very limited to zero market care or impact.
And market's not going to care. They mean nothing. Market's not going to
culture war type stuff.
Culture war, that kind of stuff. Market's not going to care. Yeah. You have your second type of executive order where maybe there is some theoretical impact down the road, i.e. immigration, right? And there's going to probably be.
I don't think that's day one volatility, though.
I don't think that's day one. I don't think that's week one. I don't think that's month one. I don't think that's first quarter.
I think that's an economic conversation that takes a long time to understand the data of that, because you're talking about, my opinion on the immigration side of the equation is we're going to control our border. We should control our border. And in doing so, we are going to mass deport a lot of people. Those people we deport over the next year, in my estimation, again, this is a variable out there, but based on my estimation, what I'm reading out, and I've listened to Holman and a bunch of the others out there. I've been watching the testimonies on the Hill this week, but in my estimation, they're not going to be targeting on the deportation side of the equation anything that would have an economic impact to the degree that the market would be concerned about it.
That you're going to even know that,
I doubt you would even see the impact, quite frankly, because the only way deportation would impact to become a market story, it would have to be mass deportation, and then it becomes you see it in the labor market data, and you would be seeing it in the wage growth, in inflationary data. That's going to take a while to actually become a story in the market. So I don't think it's a market story initially.
All right. And so then you got your third type that the market's going to care about. Now, some of these are going to be impossible to not interpret as positive. You are on day one going to see at least one or two, in my opinion, deregulatory type of, language, ordering cabinets, ordering departments to find ways to reduce regulation. Now, there's probably going to be light on details.
I was going to say, I doubt there's a surge on that, but I do think that is a general theme throughout.
Yes, it's one of those kind of like, okay, this guy's pro...
Much needed deregulation environment, quite frankly.
You are going to see specific, or maybe you won't see specific areas. For example, you are going to see drill friendly,
I don't
day
think it's
one
just
orders.
Going to be energy, though. I think you're going to see technology deregulation.
And so you have things out there that are going to be very, in the bulls camp. I mean, reason
deregulation is absolutely a winning bull theme, correct?
Yes, there's no, yes.
Yes, the bulls love that efficiency argument. So again, how big of an impact does that have initially on the market? Maybe energy, maybe industrial, specifically energy. You'll probably see an executive order there. But I don't see those executive orders as bear argument.
Yeah, I know. So you got, and I'm saving the tariff one for last, for the cherry on the top, and we'll discuss that for a second. So you have either the market doesn't care, or maybe the market cares, but it's a theoretical thing, or you have executive orders that are going to be just, in the spirit, even if they're light in substance, spirit, that. It comes down to, do you get lift off here? What is the market interpretation of the tariff executive orders on how strong they are, right? Because if you lay down the hammer and it is tariff all the time, you probably see a downward jolt on Tuesday.
I would say market sells aggressive tariff.
Now, do I think that there is a limit to that? Yes, I do. That's not going to cause a bear market.
Okay. Would you agree that Trump uses the language over tariffs as and I know it gets talked about quite a bit, but as a negotiation tool?
But if they're, yes, of course.
Hey, don't you think, hold on, don't you think hypothetically maybe wants to put a little bit of fear in Canada so that he can get a certain deal or two?
Yes, I
Same thing
do.
with Mexico.
It's hard to argue that this is, Trump doesn't use this as some technique.
Like, I think I don't know where the market is on the concern on the tariff side of the equation, but on tariffs, I see Trump using this. I certainly do believe tariffs are coming on Monday, Tuesday.
Yeah, no, okay. There's no debate that some version of tariffs are coming.
But some of that is already baked into the price of the S&P 500.
And that is the thing, is if the market, we've seen
this is an economic report. We don't know what the expectation is. We have a labor market data.
Matt, you can see Tuesday night. Listen, you can see Tuesday night the financial headlines that try to ascribe causality to price action, saying markets rally because tariffs not as bad as expected.
Well, my thing is on the tariffs, again, I think it's going to be an ongoing conversation. But if Trump uses it as a negotiation tool, what negotiation tool is allowed by Trump if he just blasts all of these countries with tariffs on day one?
And that's the thing, and that's why downward movement is a possibility.
I just can't imagine that Trump on day one comes out with the overall economic plan of exactly what he's going to do. Trump loves holding things back. Like when he talks about the military and military strategy and all these news people and media personalities are all asking him questions on this thing. He's like, I'm not going to tell you the plan. Why would I tell you the plan? Same thing here. If tariffs are a negotiation tool, and don't get me wrong, there are tariffs that are going to come to the market that are needed if we're targeting certain industries, punishing bad actors around the world. Tariffs are a necessary tool. But if you come out here with a sledgehammer on day one, day two, what negotiation tool do you have other than I will pull off the tariffs? I'm giving up negotiation power in front.
If you see 25% tariffs on Canada, 25% tariffs on Mexico, if you see universal tariffs, that's going to put a weight on the market. Like if the tariffs come out strong, because I believe the market has given, I don't believe there's been any volatility based on tariffs to the market to this point. At all, zero. That is my personal belief.
You don't believe that the overhead, that some of the volatility of how we interpret all of the data coming into the market has been impacted based on the hypothetical nature of what or will not tariffs be?
Nope, I do not.
I'm going to have to disagree with that.
No, I don't, because I believe the market believes what you do, that Trump used it as a negotiation. And I believe that's been the market's take. And so I don't believe there's been.
Even me, I'm like still kind of waiting on pins and needles to see if that's actually accurate.
Yeah. And I think this is where you're going to see the downward movement if it comes in. Now, I do not think that that's what Trump's going to do. I think when you look at the executive orders on day one, you're going to be like, that's lighter than I thought.
That is where that's
what I think will happen. And market will.
There is way too much talk on how much not tariff, but executive orders is going to happen. I just kind of think of most of those executive orders are going to be non-market moving events. The ones that are market moving events, you're giving up negotiation posture if you come out with the overall plan on day one. And so, like,
I think there is going to be some nasty language in some of the executive orders on tariff.
Yeah, there's going to be threats.
But market won't care about that.
There's going to be threats, but that's not, we know that's going to happen. He's going to put the fear of what into certain people around the world and trying to get better deals. But again, this is not an unknown to the marketplace, though. I guess that's my general point. I think it's going to be less than what the political world anticipates, and I think it's going to be slightly less than what the financial world anticipates.
And so if it comes out, because we still got to see what's happened. There's some variables here, but there's going to be a lot of them. I think you have a net positive. I think you have tariffs on the lighter side. Now, I do think tariffs are going to cause volatility down the road.
Listen,
Like like
yes,
2019, right?
yes, but that was 3 years into it. Now the trade war started in 18. That volatility persisted for a while. Yes, we're going to have tariff volatility. I just don't know how much of that's day one.
I don't think it's going to impact my calls this week.
I I I said this last week where a lot of people are having big macro conversations. I'm anticipating a hot start to earnings.
Yeah, and so
I
if
think
you
a
get
lot
this,
of
Matt,
conversations on the political side of the equation right now because we have the changing of the guard happening on Monday. We have the inauguration. We have executive orders. There's obviously a lot of chatter. But I also think the market's going to take as many cues from Netflix's earnings report as it does on the executive order side of the equation.
yeah, and so like I think you got, I think you got a good formula. I think we've laid it out. I don't think we need to belabor it at this point. I think we've laid out a good formula.
No, we can debate tariffs till the cows come
You
home.
know,
We don't
so
until we see what those plans are on the tariff side. It's hard to price anything in.
all right, let's go talk a few commodities. Because one of the things that is going to be interesting to me is not just broad market, but specific areas of the market, right? How do they, are they impacted, post executive orders? I mean, something just like we're not going to go over, but Chinese stocks. If Trump's executive orders are light on tariffs and specifically light on Chinese stocks, you're going to see a big red green candle in Chinese stocks. You just are, because I do think those have been impacted because of the direct thing, and so. But how does gold do? Gold and silver have decent technical patterns, Matt, as we end the week. Both in some level of development, both looking for another bullish thing. But these things have been really fantastic cash flow environments in recent months, Matt. Most commodities have, to be honest with you. Any thoughts on gold and silver?
They've been wonderful cash flow strategies, but on the directional side, they have not been great directional classes as the market in gold has been a little bit more wide range neutrality. Silver's obviously been dealing with a little bit of a bearish downtrend. I think both these asset classes are starting to shore up. Quite frankly, silver itself got above that 28 handle, a little bit of a snapback coming down into the 9 EMA. Now you're kind of kissing up against a little bit of a pinch between the 9 and the 50, but you get back up above 28 there. That to me looks like confirmation, quite frankly, especially above the candle high that did test above that 28 handle. On the gold side of the equation, I think it's a little bit of a different situation because you are, in my estimation, slightly, and I do mean this, slightly overextended coming into a pretty important multiple time frame resistance level right around the 250 level. If you're looking at GLD, obviously, when you're looking at the gold itself, that's right around 2750. I will say this, when you're looking at a gold itself, a gold breakout here coupled that with improving conditions on cyclical areas gets me looking at GDX very aggressively here. I love the development on GDX right around the 200-day moving average, breaking above Thursday's candle high. That would put it firmly into a bullish trend, in my opinion. So if it's me, and I want to get your take on this as well, if gold does in fact break out, I like
GDX is not even close. Listen, we don't have time because I'm trying to keep us within a certain thing to talk about the catch-up trade that occurs in commodities. But short version, if you have had the underlying stock assets severely underperform the base asset of the commodity, i.e. gold miners really underperforming gold itself, which you have had over the last several months, when the underlying thing, yes, takes off, you play catch up with the gold miners here. You play, I mean, you just do. It's a rule.
Yeah, and that's how I see it. So you got silver kissing up against a breakout channel, you got gold on a horizontal breakout, and you got GDX kissing up against the 200-day moving average on a potential high base breakout following a deeper bearish retracement. This feels 1, 2, 3 breakout level. Again, art of the reversal. Check it out. GDX looks pretty good above 37 in my opinion.
Two other asset classes to talk about before we get into stock in the news: oil and Bitcoin. Just on oil, like it's been a great run. I am really curious to see. This is probably the asset class that is not the most impactful for my decisions, but that I'm just the most curious about. Like, how does oil itself respond? We know that there are going to be pro-drilling policies, right? Like, we know the spirit and the, the specifics of what Trump will say regarding, opening up, reducing some regulations. Does oil care about that? Because if it doesn't, right, it signifies for me that there's some other structural forces, and I'm going to believe the trend a lot more. I'm going to believe the trend if they can ignore what will obviously be some pro-drilling policies coming out of Trump.
There's certainly going to be pro-drilling policies, Mark, but we already drill at record levels, and we're the #1 producer in the world. So that's the one part of the 333 plan that I just don't believe we're going to be able to achieve, is the actual 3 million barrels a day that we could produce. We're producing. It's a matter of how. I
told you in the prediction podcast they're going to supplement energy companies.
That's fine. There's a lot of reducing of the red tape to create the efficiency of your supply chain that would impact energy companies' profitability and would have a much bigger impact on the profitability of the actual energy companies than the actual impact on the directional nature of crude oil itself.
Yeah, and then obviously Bitcoin. I do not know.
Did that make sense? What I just said?
It did, actually.
Okay, I just wanted to make sure.
And then
that was
Bitcoin,
my way of saying I'm not concerned.
And then on Bitcoin, obviously, do we get anything coming out pro crypto on day one?
I would assume you do.
I would assume you do. I know the crypto world would assume you do.
I would be worried if you didn't.
I would be worried if you didn't.
You just had the Trump coin get launched just a few hours ago, and that's 2 days before the inaugural. So I would assume there are some planned executive orders on crypto. Yeah.
Yeah, and so obviously,
you think it is as much as a crypto reserve?
I think that's the only one that matters.
Like there's a couple other ones as well, but crypto
reserve. If you sign an executive order that we really like Bitcoin, that's cute. Like, yeah, I think the only thing that matters is the reserve.
I don't care what your opinion of AI is. I don't care what your opinion of crypto is. I do care that it's important for America to be the leader in innovation and control of these asset classes.
So we'll see a lot of stuff. Certainly going to want to check into the Tackle Today Pro members of the Traders Lounge. Tuesday is a can't miss day in analyzing price action. Come join us in the lounge. Go sign up for that 15-day free trial. TackleTrading.com. Sign up for the 15-day trial. If you can't find it, email me at team@tackletrading. You want to be involved in the market on Tuesday. It could be the start of trends. It could be starters trends. Matt, let's talk about some stocks in the news.
Awesome.
All right. I'll start with Apple. And the news story on Apple is my brother is complaining to me every day about Apple. This is the news story in my world on Apple, where Matt complains to me about Apple, about a stock that I don't have a particular affinity for. Don't disrespect it. Don't dislike it. It's Apple. Come on. But that I'm like, it's one of 5,000 stocks. Shut up about Apple. Why won't you shut up about Apple?
You're being a little bit more aggressive than I have ever been in any conversation with you about Apple. What I'll say with Apple is just I've seen quite a bit recently. Why is Apple going down? 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 Let me explain why Apple is going down in front of earnings.
Did you ever ask the question why it was going up?
You should have asked that question, because it was going up based on the anticipation of holiday season, super cycle on the iPhone side of the equation. And what we have seen since that Christmas season is we did not get a super cycle on the iPhone. We didn't get a super cycle on the iPhone due to a couple different reasons. Supply chain obviously is one of those concerns, but the simple reality is that the buildup was anticipation of a super cycle. There was no super cycle. Price has to give that back up. And
that's all that's happened.
And that is all that's happened. But I also want to say this about Apple as well. Apple, we are going into the age of innovation. And it is time that you start spending more money than other tech companies at innovation. You have to start spending money on research and development. Your AI product is behind other people's AI product. Your software is behind other people's software. The overall quality of your phone is not where it needs to be. This first edition of the AI phone, Mark, I did it because I had to. My other phone broke and they sold me on the upgrade. It is nothing but refurbished, nonsensical product that Apple has had for the last 15 years. If they, and don't get me wrong, Apple is a wonderful company. Tim Cook leads a amazing company, but they're an amazing retail company that has a product that they refurbish, and they have to do a better job.
They are an amazing consumer staples company.
I wouldn't call them staples. I'd call
listen,
them
if you do not get an AI edge, all you are is a consumer staples company. That's all you are.
That's how it is. And so I just wanted to just say that, just between you and me and the people watching here and listening to the podcast, is Apple needs to take a step up. They have to start being more than just refurbishing all their old product and all their old tech and charging high fees against everything else. You have to spend money on research and development. And because this latest edition of the iPhone did not create a super cycle. And yes, is it perfectly fine right now? Yes, Apple's still a wonderful company. Apple's going to be a wonderful company in the future. But if Apple does not want to get dethroned as the number one company in the world, they have to innovate, or they will be surpassed by more than just NVIDIA, more than just other Mac 7 components that are innovating in the world of AI. And Apple is behind.
I'm sorry.
I'm not sure OpenAI and the agreement with Sam Altman is going to be the game changer that Apple thought it was going to be last year.
You got to have something at these valuation levels that has some sparkle to it.
If Apple had a 16:4 P ratio, it
wouldn't be a conversation. It wouldn't be a conversation.
But that's the thing. If you're going to pay for premium,
I need some sparkle.
Either pay for NVIDIA right now.
NVIDIA got some sparkle.
Or
my next stock has some sparkle.
And what's the difference between all those companies and Apple? AI innovation. All those companies are in front of Apple.
Let's keep on the AI theme in our second stock story, Taiwan Semiconductor. The AI story is with us, is going to be with us a while, because we are in what year of the AI build out, Matt?
Going into year 3.
Going into year 3 of how long do you think that 7 AI build up? 7 years, right? Matt's been very consistent on this from 2 years ago. Matt has this timeline. We're still in the early stages. Now, at the heart of Taiwan Semiconductor is one of the heart of the AI storylines, because they do the manufacturing. And so if you want to see if the healthiness of that build out is continuing, Taiwan Semiconductor's earnings are a signal, or give us massive amounts of information.
Yeah.
Came out with a very solid report. When you look at it, was not sparkle-tacular in the sense that, oh my gosh, no, but it was just really, really, really good, right? Is that how you would summarize the Taiwan earnings report?
I would think I would summarize it as a very similar report to what Taiwan has done for many, many, many years. I thought it was a walk in the park type of report for Taiwan Semiconductor. They came in with a beat. They beat expectation by 3%. Nobody's going to write home about a 3% beat against EPS. Revenue was up 37% year over year, which is really, really, really good for a company that is not an AI-driven stock. But I would say that's a revenue handle that would typically get sold in an AI stock like Taiwan Semiconductor. But they did guide up, and so they slightly increased their guidance. I thought this was a good report coming out of Taiwan Semiconductor. But what I thought more about the Taiwan Semiconductor report than the report itself is, it showed me the market's mentality towards these AI names early on. There was no pre-programmed sell here on Taiwan.
That's a good catch.
And that's.
Let me expand what Matt means. We have, over the years, 2022, and then we had a nasty one last year, where there was evidence right at the start of earnings season of algorithmic hedge fund,
Really,
whatever.
the 2 quarters ago was
Yeah,
the big one.
where it was obvious they were dumping tech stocks. And we've seen this a few times. And so good catch. I didn't even think about that.
Yeah, and that's something you want to look for early on is what are the algos doing on the release of the data. And there was no pre-programmed sell this week. Even on some of the reports like that did eventually get sold, like Infosystems and United Health, there's reasons why investors would dump those stocks, quite frankly. And so when you're looking at Taiwan Semiconductor, I just felt like it was more telling about the market than Taiwan itself, because I felt this is just another report. Honestly, I felt like it was a doji report. I really felt it was just a walk in the park type of report, but the market didn't sell it. Actually tried to gap up and run above resistance, probably got in front of itself a little bit there, but good report out of Taiwan Semiconductor. I thought it meant more to the market that they weren't pre-programmed selling anything. So that alleviates one of the concerns coming into earnings.
Next stock in the news story is either pick your ticker symbol, Goldman Sachs, JP Morgan, Bank of America. I'll leave dirty for Wells Fargo. I actually bank at Wells Fargo, so I shouldn't call them dirty. But pick your bank.
Wells Fargo, they probably stole your data and sold it to somebody else.
So does everyone.
No, not does everyone. No, we got to stop doing that. We got to stop describing bad behavior. Oh, it's just everybody. No, you don't see Bank of America getting fined by the SEC billions of dollars over fake accounts. Not everybody performs that.
You wave that flag and charge the front line, brother.
I've been waving that flag for 20 years. Nobody cares. I'm still going to wave it.
Earnings season will contain sector by sector, industry by industry storylines. Always does. And then oftentimes price action in the following 5, 6, 7, 8, 9 weeks till we get to the next earnings season, right? Gives you a lot of trades. Finance pretty much in the books. We're going to have some regional banks. But Matt, this is going to be one of those you look back. Finance is who we thought they were, and we thought they were solid. A Trump beneficiary, without a doubt. There's going to be more merger and acquisitions. Finance is a Trump winning area of the market. Probably a source of a few good trades, good earnings season. What was your general take?
I thought the banks, like I said, what you want in earnings season is the banks to get on base, and they did more than that. They got on base, they hit a double, they ran it into a triple. I thought they did very, very well across the board. Some a little bit better than others. The investment banks out there, Goldman Sachs, Morgan Stanley, were fantastic on the quarter. Both of them with sizable beats against expectations. Both of them over 30% beat against expectation. I felt both of those companies were great. JP Morgan, as always, had a fantastic report. They're just one of the most important banks in the world, quite frankly. And they also came through here. But it wasn't just them. By the way, JP Morgan's net interest was absolutely fantastic. But there wasn't a lot of flaws in the bank's analysis this week. They were just all really good beats with positive commentary. Not the banks don't provide guidance, and they haven't provided guidance for a long time. So it's really just a matter of how did they perform. I would say the best performing banks were Goldman Sachs, Morgan Stanley, JP Morgan. Citibank quietly, though, has an interesting situation developing, as Citibank had a really good report too. They gapped up into a very well-known area of resistance. And when you look at this on a longer term chart, you just see that 80 handle, and it's like, all right, dial that bad boy in. One of the Tackle 25 stock, Bank of America, they had a pretty good earnings report themselves. Probably not as good as, say, the big money center banks like JP Morgan, Goldman did, but Bank of America certainly passed any earnings test. I basically said this in the lounge on Bank of America after they reported. I said, you know what, everybody's fine. They've already started writing their covered calls. TFC was another Tackle 25 stock that reported earnings, more of a regional bank here than one of those big money center banks, but TFC came through with a pretty decent report in and of themselves. And so in general, the banks certainly came through. Right now, 88% of banks are beating the EPS expectation. Like I said, the veracity of the beat is very, very good. It's in the mid-teens right now. That will be the best sector we see all quarter long. Like I said, blended growth based on the banks this week. Blended growth went from mid-11s to mid-12s. And if blended growth is going to be a thing, and if we're going to get that quarter that I talk about, perhaps getting, blended growth will get into the 15-16% by the time we get through Apple, Amazon, Mag 7 week, because Mag 7 provides about 50% of the entire blended growth story. And so banks did more than anybody could have asked, quite frankly. They did very good this week, and the financial sector has re-engaged momentum, and that re-engaged momentum has done nothing but shore up confidence in other cyclical areas of the market.
Yeah, no, and positive momentum, and I can't, those numbers that you just rattled off, very important to you, and I have you do the heavy work for me. For me, I'm like, all right, numbers good enough. That's all I heard. Trump policies are a financial sector winner, plain and simple. And so if I get good numbers,
pro-growth policies are typically merger and acquisition.
Yeah. So if I get Matt giving me the good numbers on earnings that I don't have to do any work for, I can match the narrative.
Just tell you what the banks told us, and they didn't tell us they had a lot of concerns.
Yeah. So check that off. Another area of the market that you have been ahead of any of the other coaches on tackle trading is the energy. I talk about Schlumberger as my fourth stock story. Tackle 25 Schlumberger. And Matt, Trump policies are very clear for a certain few areas, right? Like specifically energy, specifically finance. For me, I think they stand out. And if you remember right, what two sectors had the most consistent, biggest trends following the election? That would be finance as far as percentage gains. That would be energy. And then we got into yields and drama and algos and chaos and all of these fun things. But now we're kind of coming back around home. Finance, energy are the two clearest policy winners. From a valuation standpoint, where do these two sectors fall?
The lowest valuation coming in.
The lowest valuation of them. They're the two biggest winners. Schlumberger, I've set the stage. You take it from here, Matt.
Well, Schlumberger is the first energy component to report. They're oftentimes looked upon as a catalyst for how we will view the other energy components reporting later on in the season. And we don't get, it's not like Schlumberger and then we get Exxon, Chevron, Conoco next week. There's some time between these Schlumberger and the rest of it. What I'll say about Schlumberger is a very good valuation story here. And what energy was missing coming into this year, and energy, unlike finance, is going to have a god-awful earnings season, Mark. And let me parse my words there. Not from a price action perspective, from a raw numbers perspective. Where crude oil was at this point last year versus where the average price of crude oil was in the fourth quarter of this year means that energy companies' revenues will be down. And energy, whereas finance is going to be the biggest contributor to blended growth and overall EPS glory this year, or this quarter, energy is going to be the polar opposite of that and have terrible, terrible raw numbers. And so with that said, Schlumberger came out with a little bit of a beat against EPS. That was number one positive. Expectation on Schlumberger was 90 cents. They came in at 92 cents. That was a really good. They also beat on the revenue side of the equation. And so, and again, a lot of people will just see one beat, and they'll look at those things identically. I never judge anything based on an absolute scenario in the market. There's always a cross comparison against something out there. And so if you're comparing finance to energy from an absolute perspective, you're like, oh, everybody just go jump on finance. I think you'd be missing the story here in energy, quite frankly, because now, where was the average price of crude oil last year versus the fourth quarter of this year? Well, it's contracted, but where is crude oil going into the first quarter of 2025? It's up, which means in the future, guess what you can expect, Mark? You can expect increasing EPS projections on every energy company for the next 4 consecutive.
I love that. That kind of this sets this stage, sets this like
Yes.
the path and earnings. The one thing I've learned, I've been doing this, a while now. One of the things I've learned is when you get these earnings trends, markets freaking love earnings trends. They're easy, simple
There's
things,
nothing
right?
more. There's nothing more simple for a bull to latch on to
Hey,
than an EPS growth trend.
they freaking love them.
Just wait till the banks start upgrading coming into earnings next quarter, bro. So yeah, I just wanted to lay out the kind of the lay of the land in the energy space, because the numbers I report on in energy are going to be bad. How I describe it might be good. Does that make sense?
It does. Oh, it makes perfect sense to my brain.
Okay, so I think there's some real good opportunities in energy that are developing. Specifically to Schlumberger. Schlumberger, I think the importance of Schlumberger report is not in the EPS and the revenue handles. I think it's in the fact that they rewarded investors $4 billion with the plan to reward them $4 billion in 2025. And so the energy companies are looking at the landscape coming up in 2025. At least this is what I'm seeing out of Schlumberger, is they're saying we're going to have a pro-growth landscape for energy companies in 2025. Can we agree with that?
Yes, absolutely.
Okay. Pro-growth based on deregulation, increasing efficiency, and wait till these energy companies fully embrace AI, which they are all doing right now. Okay. In fact, in their report, Schlumberger announced like 4 different AI initiatives, quite frankly. And so you're going into a pro-growth argument for these companies. And so the smart energy companies, and I do think Schlumberger is a smart energy company. These smart oil companies, what they're going to be doing early on is kind of what Schlumberger did. We know we're going into a pro-growth. We know we have the best valuation in the market. Let's reward the investors. Let's get in front of this. Schlumberger announced $2.3 billion buyback, going to total reward investors up to $4 billion. Now, Apple might reward investors $4 billion every other day. Schlumberger, that's a big number for them. And obviously it was a positive sign. Now, when you're looking at Schlumberger immediately here, once again, this is a new Tackle 25 company for this year. You're talking about some pretty good V-shaped recovery here. I'll just say keep an eye on one number more important than other numbers here, and that's 45. 45 has to be the anchor on any resistance zone. That's where the 50 weekly is. That's where previous pivots are. Any developing breakout of 45 is a trend starter in my estimation.
All right, final. So, I've talked about 2 themes in the 5 stock stories I have so far. One AI oriented, maybe a little disappointment on Apple, some solidified, on Taiwan, pro-Trump areas narratives, that are showing early signs of already positive both price action. 5th story is from one that is a reminder. The 5th one is First Solar. You had Seaport upgrade the stock to a buy from neutral. Citing its best risk-reward profile specific to policy. And one might think that clean energy stocks in a Trump administration, why would you want anything to do with them? They aren't they're pretty I don't know. I saw a lot of
first year under Trump, First Solar had a really good.
And it didn't have a really good match.
It didn't have a really good start, but it
had a knock the 250% move or some insane things.
Really. By the way, Trump's very aggressive on some of the language here in solar, but in terms of the actual application of it, I'm not sure there's follow through there.
Yeah, no. It's more Trump. It's more what he likes than what he dislikes, right?
Well, to me, the First Solar is beyond the Trump story, and I know Trump's taking up all the oxygen right now, given the fact that his inauguration is on Tuesday, on Monday, and the executive orders and all that. But to me, First Solar is just an independent stock story, honestly.
Yep, and that is what I want to emphasize. Is
this
that
company is simply a better company than the other solar companies out there. I did all the research for the Tackle 25 recently, and the simple reality is this is a company that scored in the top 1% of all companies from a fundamental valuation plus growth perspective, which are the 10 criteria we put into the Tackle 25. This scored at a 94. There was only a few other stocks that were in that range. My scoring system's really, it's a difficult scoring system, quite frankly. Anything over 50 is a positive score quite in the scoring system. And so a 94 is like lights out. And Mark, when you look at the valuation, I dare you to find a company. And again, I'm just basing this based on raw numbers. That's it. No opinion, no nothing, just raw numbers. I dare you find a company with better valuation with the potential growth that First Solar has. I think you would be hard pressed. Now, could you make a better argument?
I'm not doing all that work. I dare you. Dude, that's what
I've done all the research. You ain't gonna do it.
I'm not gonna do it. Why do I need to do it?
You trust that I have, and it does have that. Now, it also has political headwinds, in my opinion, and that's going to be difficult to overcome as well. Technically, here on First Solar, didn't get a lot of love, but technically here, I would say right above 200. Right above 200, you got a cluster of the 20 weekly, the 50 weekly. That's where a lot of their old resistance levels are. And so anything under 200, you're just saying, anything, you got the 200 there, about 213. But it definitely needs further development is the general thought process here.
All right. And then let's get to Coach's Corner, wrap up a podcast. Yeah. You ready for some student questions?
I am. Yeah. In fact, my favorite part of the of any day at tackle trading is team time in the lounge. It's absolute. Well, let's put it like this. There's a reason team time takes 30 to 45 minutes because I love questions. I love getting questions from our students and being detailed with it. So definitely shoot them. What do we got?
All right. I had several to choose from. We had some robust sections on the lounge. I had some sent in. And so so I've picked one from 3 different categories in which you've done events or will do events in. So kind of make it a thematic Coach's Corner. You just did an art of the reversal. You've been talking about the Tackle 25 and the Coaches Show. So we're going to have one on reversal patterns, one on that. And then you're going to have an upcoming AI webinar this Wednesday, I believe. At what time?
I believe it's 7 Eastern.
I believe it is at 7 p.m. Eastern.
7 Eastern.
I believe it is at 7 p.m. Eastern. So when you can register for, go to the link below in any description that you're seeing this. But let's start with, now I'm going to give you some dealer choice. Do you want the reversal, AI, or cover call question first?
Give me the AI. Give me the AI.
All right. This is and these are some like you might have to sit back and think for a second. What do you think will be the next NVIDIA earnings AI moment? And what the student trader was referring to was that one report where they blew it out of the park and set forth true hysteria, oh my gosh, type moment. What do you think will be the next one? That's a big question, bro.
I don't know if you are ever going to get the rinse and repeat of that first initial surge in AI off NVIDIA's report. I'm sorry, that first NVIDIA report that set the stage for AI was something I've never seen in my life. It's something I haven't seen since then. And it set the stage for our entire world to get into the AI conversation from a market perspective. So I don't think there's one coming up that is that.
That's a good answer, though.
But I will tell you, obviously, there's going to be tremendous growth opportunities in AI and AI names over time. I'll tell you, there's a couple. Are we looking kind of on the AI name? Or are we looking at kind of on the semiconductor side of the equation? Like
it said AI moment, which AI, was very broad based.
Well, okay. Let me rephrase. If there's an AI moment, it's not this earnings, and it could happen I don't think it's an earnings. I think there'll be an announcement out of a company at some point. And I do believe that could happen by the end of this year, maybe next year. But the announcement will be AGI.
Okay. That's what I thought your answer would be.
Yeah, the announcement will be AGI has been achieved. Now, AGI, the moment they achieve AGI, that's not the end of the development. That's just that next kind of real important target for a lot of these AI developers is when we get into artificial general intelligence, which is that next leap in the AI conversation. It was anticipated to achieve AGI by 2030. This is just a couple of years ago. We were talking about those targets. And Mark, I said in my first AI Gold Rush, I said, I do not believe AGI will be achieved by 2030. I think it's going to be before 2030. I felt like I was being, this is 18 months ago now. I felt I was being extremely aggressive in suggesting that it was going to happen before 2030. I personally think it's going to happen before the end of 2026. In fact, Mark, I will take the under on the technology companies achieving AGI before the Fed achieves a 2% inflationary target, because I think the only way the Fed will ever achieve a consistent less than 2% inflationary target is through the efficiency of AI in general. And so I would say AGI is the next stepping stone into that. Is there a company? No, that's what this entire AI arms race is all about. That's why our U.S.-based companies and our allies are spending legitimately hundreds and hundreds and hundreds of billions of dollars on trying to get first position out of that. And so it's a vitally important part of the AI conversation. I believe they achieve it in the next 2 years, and I wouldn't be surprised if you see the early beginnings of it by the end of this year.
All right, fantastic, absolutely fantastic. Reversal or covered call question next.
Let's go.
I know I'm asking you to choose between favorite children.
I know.
Very simple question, not as complex. What is your specific favorite reversal pattern, Matt?
My favorite reversal pattern is a head and shoulders formation. And the reason being is really simple. All reversals are powerful in their own right, right? A W formation is powerful because of the simplicity of the analysis and the simplicity of what you need to do. A V-shaped recovery is to the moon, baby, and it gets people excited on the momentum side of the equation. But there's one concept that sometimes W's and V-shaped reversals struggle with. And as a reversal takes shape, if you don't get enough time in the reversal, once they confirm, they run into weekly overhead. And that oftentimes creates patterns called the gator, the alligator mouth. And so basically what occurs is if you buy time in a reversal, meaning you get more pivots in a reversal, those longer duration moving averages contract against the breakout channel. So when you break out, you enter into a very clear open air environment. You know, WBA is probably a prime example of that on the weekly chart, whereas you look at this weekly chart here, Mark, and you spent a lot of time in consolidation in this reversal. And then once you broke up above those longer duration moving averages on the weekly chart, it was a little bit of an open air environment. Whereas if you reverse in a very quick time frame, oftentimes you run into longer duration moving averages that are in bearish downtrends that work as resistance. And so I would say just because there's one additional pivot, probably about a week and a half more development in a head and shoulders formation, I think head and shoulders formations are the most powerful reversal formations.
All right, final question on covered calls. And this is one that I debated within myself many times. What are there technical patterns? Okay, let me rephrase. Let me back up, because this was a very long question that I'm trying to paraphrase.
Yeah.
So I'm looking to enter into several tackle 25 oriented covered calls. That's what the trader is asking. How much emphasis should I put on technical patterns in breaking tiebreakers if I expect to be in these for several years?
I'd say very little. I'd say if you're looking at it from an investor perspective, that's a different equation than a trader goes through. I would say you start building a position and you start writing covered calls and you treat it like an investment. Maybe you don't want to start adding to that when you're in a technically overextended zone, right? Maybe you want to wait on a reversal. Maybe you want to wait on, a better pattern development or trending development. But I don't think you have to anchor against hardcore technical analysis when you're talking about something you're going to be doing multiple different times over the next 2, 3, 4 years. And so I would say it's a secondary criteria, quite frankly. Now, if you're doing a position trader cover call, there are technical requirements to those ones, but that's a trade. What this question is suggesting is it's an investment. And so I would say the fundamental covered call part of the equation is certainly the most important part of that equation. For example, if I was looking to pick up GDX for an investment to start doing covered calls, I wouldn't need it to go above yesterday's high to enter into that mark. I would just start buying today.
All right. I've enjoyed the podcast. Matt, number of executive orders in the first 24 hours after Trump is inaugurated. Give me a number so I can bet it.
No, I can't. Yeah, I take pride in setting my lines in this one.
I have other individuals that I'm able to trick into bets a lot easier. Matt is he knows my tricks and trying to get him to do a trick. I'm
a probability guy. Not going to happen. You're not going
to. But it's got to be a lot. I'm really looking forward to our content next week. Check out the Tackle Today if you're not a pro member. For those in-depth, let's make some money conversations. Join us on the Traders Lounge. Matt, I've been loving the podcast. Send us out.
Yeah, for me, just real quick, thank you so much for attending and not attending, but watching, listening, however you consume the Trading Justice podcast. If you love the podcast, best way to help us out is to give it a nice little like on whatever platform you're watching on. Share it with others. Help us get the good word of Trading Justice out there into the minds, hearts, and eyes of other listeners out there as well. And if you're ready to become a part of Tackle Trading, want to become a pro member, you can go over there to tackletrain.com, sign up for a 15-day free trial, and come start participating and hanging out in the Traders Lounge and hang out with us on Tuesday night in the Coaches Show and going through round 3 of the covered call conversation, where we're going to be focusing on the most difficult part of managing covered calls, and that's the strike price when you're dealing with upward pressure in price. We're going to go into the Think Back program in Thinkorswim, and we're going to do case study after case study after case study. We did it last week on net liquidation value. It was an awesome webinar. We're going to do it this Tuesday with the pros for in the Coaches Show. And then obviously, if you are inclined and you want to learn more about the AI marketplace, what it is, why I believe in the growth metrics, and why do we talk about it all the time, come join me in the AI Gold Rush webinar. Registration only, and you can sign up for that webinar this Wednesday. That is, you can sign up for that webinar there at the live events page there in the description below. With that said, I hope everybody truly has a blessed week, and if you need anything from us at Tackle Trading, you can email us at team@tackletrain.com, or you can hit us up in the Tackle Train Discord channel as well.
Have a great week, everyone.